Nigeria's GDP just expanded by 30% on paper, but does a bigger economy mean a better one? Good morning and welcome to another power-packed episode of Business Week. From Botswana's high-stakes bid to gain control of De Beers to Zambia's $1 billion refinery ambitions in the Copper Belt and South Sudan now facing a legal showdown in London over a controversial oil-backed loan. This week's top stories from Africa are a mix of economic ambition and risk. In global markets, the ECB hit pause on its rate-cutting streak amid renewed trade tensions, while Tesla reported a steep 42% drop in quarterly operating income as EV sales continue to slow. Later, we dive into Nigeria's newly rebased GDP, and I'll be unpacking that with economist and strategist Chinwe Egwin. And later, we also look at what it'll take to fix Nigeria's mid-mile logistics bottlenecks and transform supply chains across the region. If you missed the big business stories of the week, fret not, I've got you covered. I'm Rolake Akintogbefilani. Let's start with a look at global energy commodities. The big story here is the volatility in the oil market. Brent crude was down by almost 6% week on week. A lot of uncertainty around trade tensions. Of course, we saw the move by OPEC 2 weeks ago to boost and increase supplies coming into the August month. That's now being reflected more strongly in trader sentiment around oil supplies and, of course, building inventories across many markets. WTI crude didn't do too badly, but natural gas is down by 12% week on week. Low demand in the summer months around the world for heating and fuel from natural gas. So that explains part of the picture, as well as adequate storage capacity we're seeing in key regional hubs globally. Let's take a look at equities markets around the world, starting, of course, with the all share index here in Nigeria on the stock exchange, value of 134,452.93 points, with a week-on-week gain of 2.1%. Deals were down week-on-week by almost 13%, but actually, year-to-date performance has been excellent. So this week-on-week figures are showing quite a bit of red, but I'll be talking a bit more about some of the trends we're seeing with the NGX since the start of 2025. And of course, market cap is up week-on-week by 2.17% to close at 85.05 trillion naira. Let's take a look at African stock markets. It was all green. Johannesburg, Accra, Nairobi, and Casablanca were all in the positive week-on-week. Not much to say here. We'll scoot over to Europe. European stocks was up by 0.26% week on week, and the FTSE followed suit. The exception here was the German DAX. Some concerns around economic wobbles, but we saw the big ECB rate hold decision this week. Signs of perhaps relatively positive economic sentiment in the Eurozone and across European markets. We'll see. We're talking about that a bit later in the show. Let's take a look at my top picks from around the world. Actually, I say from around the world, but all my top picks for this week are actually from across Africa for a change. The first big news here is Botswana, which is eyeing a controlling stake in diamond producer De Beers. Now, De Beers is looking at divesting around 85% in its JV Botswana, which it has with the Botswanan government. And Botswana currently has a 15% stake in that joint venture, diamond producer, and is now eyeing purchasing a majority controlling stake in the production company. This has been a long time coming, with the mining minister saying that it really wants to boost its financial autonomy. But there's some concerns because the country is facing a 7.2% budget deficit for 2026. So there's a concern around the financial capacity of the Botswanan authorities to acquire this controlling stake. Anglo American, which owns De Beers, is also thinking of an IPO, right? And has actually seen its first quarter revenues fall by about 40% in terms of diamond production predominantly, but also some of its other precious metals, and some concerns around competition from synthetic diamonds. So there's a question around what all this will mean for Anglo American in terms of its own operational and financial strategy. But Botswana here saying, look, this is the right move at this stage in the development of its diamond sector. Zambia is planning a $1 billion, 60,000 barrel a day refinery in the Copper Belt region of the country. Now, the Copper Belt Energy Corporation will also be looking at coming in with some of the logistics and the ancillary infrastructure around that refinery. Of course, the big users there will be agro-industry, as well as the big mining companies. And this is all part of Zambia's push for greater energy self-sufficiency. Zambia is a landlocked country that's hugely reliant on neighbors such as Angola and the DRC. And in fact, there is a pipeline project called the Lobito Luanda pipeline project, which is meant to serve as a thorough way for the refinery's output. The Zambian authorities will probably be relying on the Chinese for some of the financing to help that refinery. They're targeting, I think, 2028 to 2030 for that refinery to come on stream. Interestingly, because recently Nigeria's Dangote announced that it would be building a petroleum product storage hub in Namibia to serve the Southern Africa region, including Zimbabwe and Zambia. So it'll be interesting to see how this project plugs into that initiative. Malawi, still in Southern Africa, is facing a $2 billion forex hole, according to the IMF. The IMF says Malawi's foreign reserves will face the risk of coming down to as low as $118 million. And that will mean that it's facing a $2 billion forex gap, which is around 20% of its GDP. Now, this is a significant one for Malawi. It's faced a lot of headwinds recently from drought, from the El Nino phenomenon, and it's struggling quite a bit in the fiscal space. And inflation, they're almost tracking 30%, although the government expects that to come down to around 27% this year. So the $2 billion forex reserves gap is a concern for the country, and it will have to enter potentially some debt renegotiations with the IMF and other Bretton Woods. Its current debt to GDP ratio is almost at 88%. So how sustainable will that really be for the Southern African nation? Now to more positive news, Nigeria's stock exchange, the NGX, is heading into what may turn out to be a record year. Year-to-date performance on the NGX is almost tracking 30%. Right, in the first 2 weeks of July alone, turnover on the market was it was something like 700 billion naira, right? We haven't seen these sorts of figures for a long time. We're seeing a lot of influx of retail and institutional investors. Domestic investor sentiment is strong. We're seeing a return of foreign portfolio inflows thanks to some of the reforms we've been seeing, a bit more macroeconomic stability, forex stability. Another factor potentially accounting for this is that we're seeing a moderation in yields on fixed income and treasuries, which is probably benefiting the equity space quite a bit. So signs of strong investor confidence. The NGX is now in the top 6 performing exchanges by market capitalization and growth on the African continent. So this is one to watch. If you're not in a play in equities, you might want to take another look at your investment portfolio. The last story here is South Sudan is in London in the courts over its failure to meet its obligations on oil-backed loans. It's said to owe Afreximbank almost $700 million in oil-backed loans. It's also had struggles with traders like BB Energy and Vitol around restructuring some of those prepayment facilities. A key issue here is that pre-war, South Sudan was producing almost 500,000 barrels a day in crude oil. Now it's producing below 80,000 barrels a day. So in terms of the fiscal revenues and space that this country has, it's increasingly shrunk and is now in really difficult territory, facing arbitration over its non-payment of its obligations to international creditors, particularly around the oil-backed loans. That's it for my topics from around the world. Now let's take you to some of our other top stories from around the world. The European Central Bank on Thursday kept interest rates steady amid major economic uncertainty as the EU scrambles to negotiate a trade agreement with the US before the end of the month. The ECB has cut interest rates at each of its 4 meetings so far this year, taking its key deposit facility from 3% in January to 2% in June. Last year, it reduced rates from a record high of 4%. Tesla's year-on-year operating income plummeted 42% in Q2 from $1.6 billion to $923 million, the company reported on Wednesday. The automotive maker's revenue also declined 16% in the quarter from $19.8 billion to $16.6 billion as its global EV sales continue to stall. The automaker cited lower regulatory credit revenue, an increase in operating expenses driven by AI and and other research and development products, as well as a decline in vehicle deliveries. The president of the Dangote Group, Alhaji Aliko Dangote, has announced his retirement as a director and the chairman of the board of directors of Dangote Cement effective July 25, 2025. According to a statement Friday by the group chief branding and comms officer, Anthony Chejina, Dangote is relinquishing his position as chairman and retiring from the board so as to focus more attention on the $20 billion refinery, petrochemicals, and fertilizer projects, and as well as government relations. This is in order to drive the company's 5-year business trajectory to a superlative height, according to the company. The Nigerian Economic Summit Group has raised concerns over the persistent underperformance of the oil and gas sector, warning that it poses a significant threat to the effective implementation of the 2025 budget. In its latest publication titled NESG 2025 Q1 GDP Alert, the private sector-led think tank observed that Nigeria's crude oil production in the first quarter of the year fell well below the government's budget benchmark of 2.06 million barrels per day. This shortfall, the NSSG warned, translates directly into lost oil revenues, which are critical to funding key government expenditures outlined in the budget. Nigeria's public debt to GDP ratio dropped to 39.4 in the first quarter of the year, following the successful rebasing of the country's GDP by the NBS. The rebasing exercise, which expanded GDP coverage to include sectors such as the digital economy, fintech, creative industries, and the informal sector, significantly increased Nigeria's nominal economic output and improved its debt sustainability profile on paper. As of March 31, Nigeria's total public debt stood at 149.39 trillion naira, comprising 78.7 trillion naira in domestic debt and 70.6 trillion naira in external debt, according to the Debt Management Office. The cost of preparing a pot of jollof rice, a favorite here in Nigeria, has increased significantly, with the average now standing at 27,527 naira, a 153% increase between March 2023 and June 2025. This is according to a new report titled the SBM Jollof Index, second quarter 2025, the crushing cost of a pot, released on Wednesday. According to the report, from late 2023 through mid-2025, the index recorded a dramatic surge, with the national average cost of preparing a pot of jollof rice rising by 153% in the past 2 years. Well, that's it for our top stories.